So my three words for the first half of this year are severe multiple compression. And we've seen a lot of tech volatility in the technology market this year, but the main focus of recent headlines is the unprofitable tech basket, which we saw a lot of names down up over 70% from all-time highs. This is mostly due to the flow of funds from a monetary tightening regime, as a lot of capital is de-risking after bringing on far too much stimulus. And what we have right now is really a flight to commodity and real asset-based related names, as sentiment completely is washed out in technology. We had rampant speculation, whether it was sort of the SPAC craze, JPEGs of rock selling for millions of dollars, or cryptocurrency with dog mascots. But the real cash flow generative companies were also dragged down and really crushed during the sell-off as well. And we know that stock prices have two components, sentimental and fundamental. The sentiment around macroeconomics and future growth component really drive the multiple, while execution of the underlying business drives the fundamentals. And while fundamentals can be affected by slowing growth rates, the real underperformance in technology can be attributed to sentiment meltdown through this massive multiple compression. And if we look specifically at the high growth cohort in the technology space, these companies used to trade over 45 times EV to revenue, and they now trade closer to 8 times EV to revenue. That's 37 turns of multiple compression in the span of 8 months, which has absolutely crushed the sector. I'm not saying that 45 times EV to revenue is sustainable in any way, but we don't need to get back even close to previous multiples for these risk reward profiles really start to look attractive. And when companies like Google and Microsoft are trading even cheaper than Coca-Cola and Costco, even on bottom line multiples, it's a fair conclusion to say that tech really does look oversold here. And if you believe we're going to see coming up soon peak inflation, we're mostly going to avoid a recession. This should give the Fed permission to turn a little bit more dovish, which should give a bid to risk assets here well into the second half of the year, especially those beat up but profitable technology companies. So my three words for the first half of the year were severe multiple compression, and my three words for the second half of the year are stay the course.